So the year is 2023. Finally, we are here. Ladies and gentlemen, I hope you're doing well. So this is Patrick Egon, the channel is Story Teach Patrick Egon. Today, I want us to talk about a concept which is really important to us as an individual and as a collective community. So this is all about financial literacy. I was having a sneak peek on the CBC, which is being implemented currently in Kenya's curriculum, and I could see that financial literacy is something which has been pushed forward so that the learners can be able to be inculcated, as well as the teachers. And I think this is the best move towards the right direction, because most of us, despite having gone up to the level of being a professor, being a doctor, and all that in the academic world, most of us still lack on financial literacy. And it's unfortunate that you may be earning a lot of money, but you have a spending problem. Or you have the life you wanted to have, but unfortunately, because of your financial illiteracy, you are messing it up. So let's go back and discuss financial literacy, and this is my call for you this 2023. If there is something you would like to challenge yourself, talk about financial literacy. This is among the skills I would like us to work on them, so that eventually we can be able to have a prudent use of our finances, because that is the milestone we need as we step forward towards succeeding in the major life goals. So what is financial literacy, you might ask? I'll give a short description of financial literacy. My definition will be, it is a collective mastery of the skills and concepts which will help us to manage our finances in a way that we can be able to organize, you can be able to manage, you can be able to control and direct our financial activities. The key term is your financial activities and decisions, which eventually will result in good or prudent and efficient and effective use of your financial resources. So basically, that will be my definition of financial literacy. So the question will be, why will it be interesting for me to have financial literacy? So towards the discussion of this topic, I would like to focus on two key things. Number one is what is the importance of having good financial literacy? And number two, what are some of the skills I'll point out towards mastering the financial literacy? This is a journey, it's not a one-day thing. But basically, before even I start on pointing out the positive aspects of financial literacy, I'm very sure that you have gone through the problems of being financial illiterate. Number one, you might be having too much burden, unnecessary ones. You might be having an overspending problem. You might be having an earning problem. You might be having, as at now, a savings problem. You just find yourself, you earn a lot of money, but eventually all of them is gone. So those are some of the results of being financially illiterate. So let's go back and ask ourselves, what do we benefit by being financially illiterate? I'll cluster it into two broad perspectives. Number one, I think being financially literate brings you the positive aspect of risk management. With good understanding of financial management, it means you can easily be able to pinpoint the roadblocks which comes with finance and be able to prepare a way you can be able to mitigate this. And with mitigation, it means you are prepared in advance, and therefore you can be able to avoid the economic distress which comes with loss of finances. When you talk about risk management, it means you make the best decisions when it comes to managing your loans, when it comes to choosing your investments, when it comes to managing your debt, when it comes to insurance, and all decisions you make in finance management. It means you know what are the loopholes in your systems. If, for example, you are not employed in a regular income source, it means you can be able to plan yourself objectively and minimize on the economic distress which comes with loss of finance. So that is my first point on why you need to be financially literate. It helps you to manage the risk which comes with financial distress. Number two, which I think is the goal of most of us or every one of us, is financial stability and self-sufficiency. When you talk about finances and financial stability, this is the eventual goal. Even if we go to school, even if we do anything else, all of us dream of a day we say we can be debt-free, or we are only running good debt. We have money to enable us live our lives comfortably, either we are working or not working. And I think that is the biggest goal every one of us want. So this goal comes from financial literacy. What do we mean by financial stability and self-sufficiency? It means you have enough wealth or finances to manage your life, to fund your lifestyle, 2 or 3 or 4 or 10 years down the line, with some earnings coming in from different sources. So what brings in financial stability and self-sufficiency? Number one, ability to make good financial decisions. How do you make your financial decisions? How do you make the decisions to spend on something, the decision to not spend on something else? How do you make decisions on investments? If you make bad decisions, it means you'll drain your finance, and eventually that will bring a burden on your hand. So with good financial literacy, it means you are going to achieve your financial goals, and good achievement of financial goals means eventually being financially stable, because that is what you need along the way. It means you can manage your expenditure, you can manage all those other aspects, and this results in financial stability. Maybe this can be well explained by the 5 things I want you to do so that you can build on financial literacy. As I said in the start, this is a journey. It's not a one-day thing. It takes time for you to transit from being financially illiterate to financially literate. So there are 5 things I want you to focus on while building yourself for this particular journey. Number one, I'll talk about ability to measure your investments and make the best decisions when it comes to investments. When you have money, when you have earned money, the decision you need to take next is how to use this particular money to get money. And that is the investment bus, which is one of the key things I want you to look at. What are the investment portfolios available for you? Are you a business person? Are you buying property? Or are you doing any other decision? So choose the best investment for you, depending on, number one, is the risk capacity you can tolerate. Number 2 is your knowledge. And number 3 is the systems you have built all along. This one will make you make the best investment which you understand, or which you have a team which can help you to run it so that you don't lose your money. Number 2 is debt management. This is important because most of us find ourselves messed up with debt. So you need to choose between good and bad debt. Depending on how you use debt, it can be your make or your breaking point. And the best decision is to make good debt and manage them. If you have your loans, know how to manage them. Remember, taking loans is good at a particular time, and taking loans is bad at a particular time. And the biggest challenge you can have when you have your loans is to manage them. So that, remember, making a mistake in one loan will ruin the credit score which eventually means you are not creditworthy to have other sufficient loans. By the way, there was a joke I heard with somebody that before a bank can give you money, they must ensure that you don't really need that money. While this might feel a little bit awkward, it is the reality, because they have to look at your credit score and determine that you actually know how to manage your finance. Number 3 is financial risk management. How do you prepare yourself towards the risks which comes with economic distress? How well have you talked about your insurances? How well have you talked about your loss of investment? How well are you prepared to manage the risks which come along the way? So that is the third key thing you need to understand. The fourth one is savings. While we use investments to create money, we need the pocket. You can only invest what you have. So savings is one way of raising capital. Savings is one way of preserving capital. So whatever you earn, how do you save it? Do you have a working system for your savings? What are your savings doing for you? In short, I'm asking you, which kind of a saving account are you running? Some of us, we can use saving accounts which don't give us anything at the end of it. But if you are sharp enough, you can use a saving account which can act as an investment for you. For example, if you are to choose the preservation capital journey of MMFs, that is something which is liquid. You can withdraw into for 48 hours. That's a good savings account. You can talk about fixed deposits, which will earn you some interest. You can talk about SACCOs and any other method, so long as the savings you are getting is getting you something in return. So look out on the different accounts you can be able to save and make use of your money. Why is savings important? It is important because it gives you the muscle power to start the investment. It gives you the muscle power to eventually draw in money. They say money goes to where money is. So make a priority into your savings. Start. That is the biggest challenge when it comes to savings. Have an automated systems you can be able to work on. If, for example, you are being paid monthly, ensure you are doing it monthly. Have a standing order which can remit your finances down there automatically. Don't be indisciplined when it comes to savings. Don't go into the savings account withdrawing the finance. It will not help you. Have a long-term goal and have a clear goal of savings. That one will help you accumulate your finances. The last thing which is important is what is called budgeting. Budgeting is what we miss, many of us. And the moment you miss a budgeting process, it means you're going to use your money whenever and wherever you get in any other way. And sometimes you say you only save what remains. So budgeting and a budgeting process is something you need to go down to and study well in your financial literacy class. Why is it important? From a budget, you can be able to track 3 key things. Number 1, you are going to track your expenses. Number 2, you are going to track your incomes. And number 3, you are going to track your, let's call the income, the expenses, and I've forgotten the other one, but that is the budgeting process. It gives you a clear plan, a clear goal of how you're going to manage your finance along the process. So those are the 5 key things I want you to learn and make part of the financial skills as you go on financial literacy. So that is it for financial literacy. We are going to discuss more on budgeting, on all the skills as we develop this, because this is for those of us who have not been able to have a view of the 10 financial decisions and financial practices you need to have to improve your financial muscles. A video I did last year, I think it is time for you to go and look at it. Otherwise, take the challenge this year, ensure you are good when it comes to finances, and I'm looking forward for you to attain your financial goals. Until next time, take care.